Morning. Morning, Doug. Morning, Steve-O. Maladay. Dominic, how are you guys? Now it's a happy Friday. Well, I don't want to use the word happy. What happened last night wasn't too great, honestly. Yeah, Friday the 13th is right, man. Man, all these names are doing direct offerings too. Morning, Jas. Good morning, Abe. Yeah, first thing I kind of noticed was obviously the market's getting bought up some, but Apple's the first name to break yesterday's highs. So, it's like just when you think, I don't know, man. Hard to say, right? And Apple making a full rebound, of Google staying a bit heavy. Some names like the oil names and obviously gold are gapping up. So some names are rebounding nicely and some are staying pretty heavy. Morning, Noah. Makes sense. Airlines are getting beaten up. Morning, Vic. Yeah, JP Morgan's holding well. I already own it, but if we open up above the 20 simple moving average, then I'm comfortable holding it. And ideally above yesterday's lows. I'm already in there. So it's gap down last night, wasn't feeling too good. But semis seem to be holding up okay. The banks seem to be holding up okay. If those two hold up well, like I said before, you're going to have a little bit of issues taking the market down. All right, real quickly, I'm going to make an espresso really fast. Yeah, Jordan, I had the same situation. I cut Shopify under prior day low. No big deal. That's just kind of how I had to go. Um, and I did a pretty decent job. The way this was closing the day prior, I cut some off when we broke below VWAP and then started to hold. And then yesterday, I took the rest of it off right in the morning when we broke prior day low. And, that was a smart decision because, I had still 15,000 shares. So would not have been too happy if, you stay stubborn and you're holding. That's why you respect your stops. So, and then SoFi, similar deal. I had to cut a third of my position yesterday. And I did it when we were losing its opening print. And then, I'm still holding, good chunk of my shares. So 2/3 of my shares. Very small, Levo, because I also have, I'm definitely down, but I also have a short on QBTS. And, the way I kind of look at it is I don't, all of my positions outside of SoFi and JP Morgan are currently green trades. So like ARC is a green trade, even though it's gap down. TEM is a great green trade, even though it's gap down. TMDX is a green trade, even though it's small gap down, and Toast is a green trade, even though it's gap down. And that's because I've trimmed all of my positions. So, there's really nothing. I don't ever really think about. Here's the reality. I try to not even look at my portfolio too often. I take my position. I set my stop at low. I don't stress over every single up or down move. You take your position. Your stop is set at low, and you treat every individual position for its own price action. So, and over time, it works out well. But because I do have some QBTS short, this gap down's helping. Not a ton, but it's definitely helping. But yeah, still down, about a percent, a little bit more, probably 2% if I had to take a wild guess. Any thoughts on ERJ? Looks good, super thin. Thin name, kind of. Trades thin too. But looks good. I don't know. It looks like it's trading a little bit lower right now. Not too much. Looks good, man. This had a super nice setup down here. It's just choppy before it took off, but on a pickup in volume, and then gone. Another one. Hasn't really given too many clean setups. Yesterday was one, I guess. Yeah, I'm gonna be. You'd be good to be cautious on energy names. Chasing a gap up. Commodities, and I say this all the time, just like gold names, they're best to be bought against ascending moving averages. Yeah, I'm not getting too toast with toast because I've trimmed it now twice. But yeah, this gap down's not that fun. It's right at 40. It's the close. The close here was 40.84, and that's the high volume close. So ideally, we can hold this area. If we can't, I will quickly be out. Yeah, MPC looks good. Just be careful buying gap ups in commodities. Usually a pullback towards an ascending moving average is the play. Whether it's gold or crude oil, silver, platinum, you name it. Pullbacks towards ascending moving averages are much better. Yeah, I don't know. Apps is not a commodity name though, is it? Delicious. RCAP. Yeah, I noticed Drone's name. We're getting a little bit of love. I noticed UMAC as well. And then I don't know if PDYN is a drone name. APLD, I like the bounce back. I definitely like the bounce back there. DRS. Sorry, guys. I trying to see if I can't punch myself out of a few of these stocks that gap down from where they broke my original stops. And I do like the bounces on some of them, but I don't like to sit around in names. If I can get some liquidity and get out as close to my initial stop as possible. I don't like sitting around and hoping and praying things come back around for me. I'd rather deal with momentum when it's there. No, I don't change stop loss. No, not at all. So like my stop yesterday on JP Morgan was the 20 simple moving average. We're just above that now. And I don't expect the market to really be ripping right at the open. I could easily be wrong, but I'm using kind of some of this morning bounce to lighten up on some of my position. I'm not just trying to sit around and then watch things wash back out to yesterday's lows. Yesterday's lows, that's pretty painful. So, respect my original stops, and be totally fine with that. And like I said, I've got a short on. My only real mistake yesterday was noticing the weakness in NNE and not shorting that one with the nuclear names. But I'm short QBTS and that gap down overnight, and obviously I'll sit in that one. as something that I think goes, in time lower, maybe back to the 50 simple moving average. But, in the meantime, I'm trying to punch myself out of a little bit of SoFi. And, there's just too much volatility out here, right? The best stocks, they break out and they stay out. And, you're in a less choppy environment. So fortunately, I did a pretty nice job of chopping myself out of a little bit more ARC. So I didn't have to sit in this gap down with a full position. But yeah, something like JP Morgan, there's just not enough liquidity for me to get out with the amount of shares that I have. So I kind of just have to wait. But, something like a SoFi, there is. So yeah, and here's the thing, the market could easily end up rebounding nicely, right at the open. But I don't like to hope and pray. The last thing I want to do is have a bunch of positions that are gapping below my stops, and then, I have to, try to manage all of them right at the open. It's just difficult. And this is why progressive exposure is super important, right? Imagine I opened, 4 or 5 names yesterday. You'd be having to deal with 4 or 5 red positions all at once, versus ARC is trimmed and a green trade no matter what happens. TEM is trimmed in a green trade no matter what happens. TMDX has been trimmed a bunch of times in green no matter what happens, right? Toast is a green trade, almost no matter what would have happened. So, and then I've got a short on. So that's kind of, making up for what SoFi is going to do to me and what JP Morgan, the loss that's going to give me. So yeah, this is why progressive, it's days like today where you realize, holy shit, had I taken way too much exposure yesterday, you'd be dealing with a massive headache today and a loss too, and not a pretty one. So, um, it's just good to remember to use progressive exposure. If you don't, it's a tough lesson you got to learn at some point. So, and not a fun one. Nobody wants to be the guy who got, 50% of their portfolio to work and then the next day got deep seeked. That'd be a super, super, super effing painful lesson. So, but there's just no real volume here, which sucks. Yeah, I like John Deere. Yeah, I like John Deere. This has got a very small gap down going on right now, but man, this chart looks awesome. This weekly looks great, right? Move out of a huge base and just looks like it's just high tight flagging just outside of a big base. Looks great, honestly. Yeah, John Deere looks awesome. Yeah, and I know people who had like VRT, VST, CEG, um, dude, so many names, you know, during that DeepSeek debacle. Yeah, I mean, dude, that's never fun, man. That sucks. Sorry to hear that, dude. It's how it goes sometimes. And the market will do that from time to time. Like there is nothing to say that today, we would have gotten a little rebound this morning. How do we know we didn't gap down and then stay heavy for the rest of the this morning? And then now all these little names aren't having a little rebound. Like, my SoFi is, still down at, call it $14 now instead of back at 14.45. So, that wouldn't be fun at all. How do I know my JP Morgan wouldn't still be at 260 or even lower? Nobody knows. And those are the lessons. That's the reason why you don't get so much exposure on all at once. You have to use anybody who's just like, oh, it's just based on setup and I just take the setup whenever I see it. And if the setup's good, I'm in there. And then all of a sudden you put 60% exposure on, 70% exposure on in one day, not tons of cushion going into overnight. And then something like this happens. You're going to lose 10% of your portfolio overnight, like just like that. It's like, no, you only need that to happen to you one time to realize how absolutely important. It's why I talk about it so often. I don't just bring it up for my own good. I've been there. So, too much exposure. If the market cannot pull you in with the sheer amount of setups that there are and the amount of follow through, remember, every moron makes good money in a strong market, right? You want to be the moron who makes a lot of money in a strong market, the moron with rules. And when the environment's really good, you've got rules to get you in. You've got rules so that you can keep some of those gains you've made. You've got rules to get you out. And then you're making money when the times are good. And you're trading your biggest with all your portfolio when times are good. And then you've trimmed some into strength. And then you're trading your smallest when the market turns or the market's not being friendly to brand new positions like it hasn't been for me. Outside of like ARK and TEM, right? Shopify looked really good, completely got obliterated yesterday. And then SoFi with the gap down. So really my last two positions, no traction. Recently been stopped out of Uber and I've been dealing with some, headaches in a few other names. So, the market's just, it hasn't been super friendly to brand new positions. If you bought your stocks in early May, well, then it's been pretty good. So, and then again, on a day like today, we don't really know what is going to work really well or not, right? Oh man, gold looks so good. We don't know what's really going to work well or not. This gold's going way higher too. That's what it looks like to me. So for instance, I can't get out of JP Morgan right now, right? I got 6,000 shares of JP Morgan and I can't get out. There's no liquidity. So, I'm kind of just, just hanging in there and hoping that it, doesn't open up, 2, 3 points lower from where it currently is right now. But if we start to break the 20 simple moving average, which is where we're at right now, I will be out. And then, like a SoFi broke below my stop, and I had 20,000 shares left of SoFi, even with my trims yesterday, and I'm just looking to take a few off as close to my stop from yesterday as possible. Like I'm not looking to hope and pray that we get back above my stop level, and then I'm back in the green. I have a 1478, right? I'm not looking to hope and pray that it goes. I'm shoot first, ask questions later. So it broke below my stop. If I can get out as close to my original stop as possible, which was the day's low where I bought it, then that's my plan. And the issue is there's just not tons of liquidity here. So, I can't really punch out too many at once. It's like I'm looking for a small little bidder to show up so I can get off like 2,000 shares at a time, which is pretty effing annoying. But yeah, I try to not adjust my stops. But again, like on a JP Morgan, I just can't punch out anymore because there's just no liquidity. Center point and E-Trade. Center point E-Trade. Yeah, if I'd gotten into energy, well, it depends, right? So it's not that, I said it a few days ago on X. I thought crude oil looked like a failed breakdown, and you had a few nice setups there. So like MPC was one, CRK was another, CVI was another. So, there had definitely been some names in that group that looked pretty good. No, JP Morgan, there's not tons of liquidity right now. Right now this thing's trading like every 5 minutes, like 500 shares. There's nobody trading JP Morgan at this hour. So you would think that there's liquidity, but there's not. And, it trades with a kind of crappy widespread. Yeah, but dude, this thing is so choppy, man. Holy cow. I would have a headache owning this thing. Looks fine, but choppy as ever. I don't know that I would call this a clean Mark Minervini VCP. This Ollie is looks pretty miserable. Yeah, it's finding support at the rising 200 all the time, but looks fucking miserable. No, I don't, Texas Oil Baron. I don't just say it's a moving average. It also has to do with price structure, right? So, like, let's just say a stock pulls in and then it finds support at the rising 10. And then in a few days, it pops back up from that level. And then in a few days, it comes back down again. But now it might break the 20, but it's still above that higher low. So, price structure is even more important than the said moving average for me. Like price will come and retest a certain price level a few times, and that price level becomes way more important. Barcode, yeah, we're talking about a Ollie. Yeah, terrible. That one's a little bit of a headache in terms of price action. Oh my goodness, SBET. Holy cow. Look at this sucker. A little liquidation, no big deal. 120 all the way back down to 10. Too bad there were no shares to short on this thing. CoreWeave. Yeah. I mean, I don't see anything that's totally wrong with this one just yet. We'll see how it trades today. Yeah. CoreWeave. Yeah. CoreWeave cure cancer. No, I thought, I thought the entry for Palantir was 2 days ago. Now I didn't really love this action right off this washout, right back into that breakout level. But 133.5 is the important level for me going forward, and you're underneath it just at the moment. Some more tightening here. I mean, this is sloppy action. This shit sucks, right? When I initially bought it right here, this is what I really want for my stocks. I bought it on this day right here, 423. It was the day after I bought Netflix, and then that's what happened, right? That was the action that I got immediately after I bought it. That's what I want to see. Right? This makes it nice and easy to hold. This here, this is effing terrible. This would drive me mad. Slick, it's on my X page, brother. My initial stop was low of day. When I initially bought Palantir, was low of day. I had just under $100 average, so it's like a 99. I want to say 89. I could look right now. I'll tell you. But I remember I bought it on the 23rd because it was the day after I bought Netflix. So I'll tell you right now, my exact average. Here we go. 99.89. Yep. It was the second position I bought after Netflix. Oh man. I'm glad it's Friday now. I know I said it was Friday yesterday. I sure Wish as hell it would have been. Well, actually, I don't know. Then I don't know how I'd be managing this risk this morning, but yeah, I think JP Morgan might be one of the first names I'm stopping out of this morning. Not going to just sit around and hope things bounce. But TMDX has been so nice. I bought TMDX and Toast on the exact same day. Look at how one has been acting. Look at how the other has been acting. Very, very annoying. Yeah, bit of a rising wedge. Yeah, bit of a rising wedge on the QQQ. Yeah, so for instance, an AMD came right up to its 200 simple moving average. And then what did it do? Hold on, let me change this a little bit. Scale. So this thing comes right up to its 200 simple moving average and then rejects, right? So this isn't, this is why I've been avoiding an AMD, right? It's been underneath its 200 for the better part of, almost a year now. And you get a nice move right off the lows, right into the 200, but just like an arm, you're kind of lagging where it's like hardly over its 200 versus, a name like AVGO where it had a nice little bull flag setup right in here, right? Or even a TSM where it gets above the 200 and at least consolidates above the 200 for 2 weeks, right? Or even in NVIDIA, right? Where it gets above the 200, consolidates a little bit, not just kind of grinding higher. Don't love the action in NVIDIA too much just because it's grinding and, it doesn't really ever take a moment to pause. But, it's definitely better than, what we're seeing in some of these other ones. But again, KLAC, really, really nice. Got above the 200 on a little gap up, just went completely sideways. LRCX, same deal. Got above the 200, completely sideways. Those two charts look identical, and they played out identical. So ASML, same deal. Little gap up above the 200, and then just, went nice and sideways here, and then broke out and, hanging out. So it's really what you want to see. Yeah, I'm still in a piece of my SoFi, yeah. But I had 20,000 shares left this morning, and I was able to get out of 8,000, and we're kind of just waiting for the open here. Not much else I can do. I chopped some off yesterday too with the pretty weak close. Same way I handled Shopify. Turned out to be the right move. You could, but I would be careful buying gap ups right in the morning on energy names. Definitely looks good though. And keep your eyes on /CL is what I would do. Yeah, so SMCI is doing that right now, but the problem is it's lagging. Okay, so SMCI is doing that right now, but now tell me, just as a little thought experiment, what happens if NVIDIA, KLAC, ASML, all those other stocks that, did what SMCI is doing now, what happens to those names, or what happens to an SMCI if those names begin to pull back? What does SMCI then begin to do? So how come SMCI isn't moving with those names like KLAC and LRCX and TSM and AVGO? How come it's not keeping up with those names while they're breaking out of their little consolidations and going higher? Why isn't SMCI at 50 or 52 or something like that at this point? And what happens to an SMCI if those names start to turn down? Well, you now own the laggard, and the laggards get their asses kicked the most. That's what's going on. Yeah, Philip Morris. Dude, when I first started streaming, I had Philip Morris on watch down here. Nice move up, nice little consolidation. Had one little good shakeout and then reclaimed and kept going. I wouldn't buy PM up here. It's got a base. PM's got a base. Looked way better down here when I first started streaming in March. I like 5-minute opening range breaks. Yeah, when did Oracle become such an incredible mover? It's not just Oracle. It's IBM's been a really nice mover too. Oh shit. Here's Oracle. And then nice breakout on volume, and then IBM. Good morning, Jose. Speaking of, guys, I got to get going. Get ready for stream. I will see you guys now. It is officially have a good weekend, and I will see you guys bright and early on Monday morning for pre-market prep. Thank you guys as always for being here. I appreciate you guys. Makes my job a whole lot more entertaining. And yeah, please have a safe weekend. Don't do anything crazy. And I'll be back bright and early on Monday. George, don't be messing with me, man. All right, guys. Have a good one.